Hey guys, how's it going? Shane with Eastman Insurance Solutions, and today we are answering the question, what is high value homeowners insurance and how do I know if I need it? High value homeowners insurance is becoming a very common thing here in California, especially as the cost of building materials, the cost of labor is increasing. And I'm going to explain to you the difference in what a high value home is and what it's not, and why you need to be concerned if you don't have the right homeowners insurance coverage. The last statistic that I read said that in excess of 40% of true, authentic, high value homes are underinsured. People do not find out about this until after a loss occurs, and that leaves them with two scenarios. Option A, they are going to have to sue and fight the insurance company to cover the losses, which can be a long, painstaking, huge process. Option B, and what happens, I would say 90% of the time, is they end up writing a check or getting a loan to cover the difference. If your home's reconstruction cost is in excess of $750,000, or if you have a custom built home where you got the architectural plans, you worked with an interior designer, your home has features that would not be found in your typical track built home, you need more than likely a high value homeowners insurance policy. And here's why. Your traditional HO3 insurance policy that 90% of people have is not built to properly cover your home. This is to cover the traditional track style homes, even up to the custom track homes. And what I mean by custom tracked homes is the homes where you have the ability to go in and pick and choose between different features and building materials. Those types of homes, you're fine with a standard HO3 insurance policy as long as you have the proper extended replacement cost coverage. When you get into the high value homeowner range, again, those policies are not structured to properly cover it. And so, again, you end up footing the bill at the end. A high value homeowners policy more than likely will have guaranteed replacement cost coverage. That means whatever it costs to replace, the insurance company is going to write a check for. It also has extended liability, which is a huge thing for people that live in these types of homes. Typically will have higher assets and as such need to protect themselves to a greater level. But it also has features and benefits like a higher amount of loss of use coverage. Okay, you live in a custom home, you live in $1 million plus custom home. If your home is demolished and your contractor is telling you it's going to take 18 to 24 months to rebuild, you're not going to want to move your family into a 1,500 square foot track style home for the next 18 to 24 months. You're going to want to soften the psychological blow, put your family into something that is to the level of your guys' home. Just like you would on your vehicle. If your vehicle were to get damaged, you'd want to replace your BMW with another BMW. You don't want to replace your BMW with a Toyota Corolla. And so, again, fundamentally, these policies are structured differently because your custom home, your high-value home, was not meant to be covered by a typical HO3 insurance policy. There's a lot of other details that go into this, like concierge claim services. It's the difference between staying at a Motel 6 and staying at the Waldorf Astoria. I mean, the process, it's just the two policies are uncomparable. Here's the cool part. It does not cost you, in the grand scheme of things, it does not cost you that much more to have the proper insurance policy as you would think it would be. Your typical home in California has a reconstruction cost right now of around $450,000. That could go as high, if it's a total loss, it could go as high as $700,000. And the average premium on that policy is around $1,500. Whereas a true high value homeowners policy that is written properly, that has the possibility to be $2 million plus paid out if we're talking a total loss, that policy may only run you $3,000, $3,500 a year. So again, in the grand scheme of things, you're not substituting, or you should not be worried about cutting costs, stepping over dimes or stepping over dollars to save dimes, as it were. It's not that big of a difference. Another statistic that I want to throw at you, and I know that we're running long in this video, direct writers, so your captive insurance companies, your state farms, your farmers, they control about 85% of the true high value home business. And again, those policies are not structured to cover your home. Again, you're in excess of $750,000 in reconstruction cost. I'm not talking market value. Market value, what you owe on your home, has nothing to do with if your home is a true high value home, because the cost of land here in California is insane. You cannot approach this from a market value. You have to approach this from a reconstruction cost approach. So if you're in excess of $750,000 to rebuild your home, you need to be looking at a high value homeowners insurance policy. If you have questions on this, don't hesitate to call me. I've spent a lot of time in this space. It's something that I kind of enjoy working on because the policies are a lot more specific and a lot more detailed than your traditional homeowners policy. So it's kind of, I don't want to say a hobby, but it's something that I enjoy doing, and I've spent a lot of time working on it. So if you have questions, even if you're on the bubble, hey Shane, I might not be 750, but I'm 675 or I'm 700. Give me a call. Let's talk. I will point out the differences of the features and the benefits of the policy. And you may be surprised, and you may find out, hey, I'm cool where I'm at. I just need to bump up my extended replacement cost coverage, or, oh my God, I didn't realize that there was such a gap here. I definitely want to look into that policy. Give me a call. We'll talk. I'll explain the differences because that's what I'm here to do, be of value to you guys. I hope that you guys got something out of this, and I will see you on the next video.
you.